Hey, everybody. It is Chuck Barone, Friday, May the 24th, 2024. Moving up here on Memorial Day weekend. The summer is here, guys. Wow, this year's going by super fast. This Memorial Day, guys, don't forget the reason we have this holiday. This is the weekend to pay respect to all of those brave souls who gave all to defend our country and our freedom. Um, this is a big holiday for me. I don't have a lot of veterans in my family, but I respect the families that do. A lot of military families. God bless all of those who served. Anyway, before I get rumbling around here, let me take a half a second and welcome everybody to the show. Good to see all my friends, Gazi and Salty and Donna and Attila and Kevin and Wolf's on today. A big smoke, all of our regulars. Nice to see everybody here. And let's get rolling on this show, guys. All right, so today was kind of a weird day. This was one of those weird weeks, I think, truthfully, where we really didn't have much data to move on. Just a little bit of this and a little bit of that. Today we got this consumer sentiment number, and man, was it pretty bleak, guys. So we'll talk about that in a little bit. The markets, though, well, the markets were feeling still pretty good. I think that Nvidia earnings, that really bumped the Nasdaq up today. This is a company that's selling for over 1,000 a share already. Their earnings are popping. They already announced a 10-for-1 stock split. This is a company that's like, I guess, for AI chip maker companies. This is the Google, this is the Microsoft, the big one, so to speak. And this company is just blowing it out. So that carries the Nasdaq today. The stock market's kind of a weird day, though. So you look at these markets, the Dow is up 4 points, 39,069 points. So when you're at 39,000, a 4-point move is basically a non-event. The Nasdaq, though, bumps up 184 points today, 16,920. That's a new record for the Nasdaq. The S&P moving back up toward record territory, plus 36 points today, 5304 for the S&P 500. So stocks up across the board. Not much of a move anywhere, really. Just kind of a quiet Friday. I think the market's bracing with this week's super light data. Next week, end of month coming. I guess we'll see more data next week. So the market's kind of keeping some powder dry, see what's going to happen next week. The bond market was basically flat today, not much happening. The 10-year unchanged, 4.47%, no movement on the 10-year. The 2-year up 2 basis points. So the bond 10 or the 2-year falling just a little bit, up 2 basis points, now sitting at 4.95%. Maybe we're going to get a 5% 2-year again, guys. And I tell you, these bond yields now are getting to the point where they're getting competitive with, taking money out of the stock market. People, if you can lock in a 5% return or even more if you're willing to go for shorter term, these are attractive, especially to fixed income borrowers who don't want a lot of risk. So markets, kind of jostling around today. Weird day. The friggin' dollar takes a mighty dump today, down 32 bips on the index, 104.73. Yesterday was back up over 105. I'm thinking that, the dollar is on its way back up, but today a reversal back down under that 105. The bad news, though, is it didn't really do much for precious metals. Gold and silver gaining today, but not very much. Gold up $3.90. $2,334.10 for an ounce of gold. Silver rallies up 25 cents, $30.31 for an ounce of silver. These are decent prices for precious metals. These bull markets, they never go straight up. That's the way the chart looks. But there's these little cutouts in between, and that's kind of where we are right now in gold and silver. I'm telling you guys, though, this rally is nowhere near finished. So get ready to see gold and silver prices higher. Oil rallies up today. It was moving into the kill zone yesterday, but rallies up 90 cents today. It was down earlier, rallied up toward the end of the day, closing $77.77. 7777 Vegas. This is meaningful numbers here, right? I'm no numerologist, but when you see all sevens, it might be time to go play the mega bucks, right? That's what you want to see on that slot machine going across. Bitcoin today rallies up $1,512, $68,932 for Bitcoin. Still a good, strong number. Having some difficulty busting through that resistance at 70,000, though. Another week where it couldn't break through. We'll see what things hold for Bitcoin. We could get a bit of a correction if it can't break its way through that $70,000 number. All right, we got this consumer sentiment report today. Now, this was kind of a very quiet report. I didn't see very much about it. I saw Santelli talk about it for about 2 seconds on CNBC this morning, but the number comes in at 67.1. That's down from 77.2 just last month. So consumer sentiment, consumers have totally had it. The index crashes across the board. Consumer views on current expectations fell 10 points, just like the top line index did, down to 69. Expectations for the next 6 months, how will the economy do in the next 6 months, fell 8 points to 68. Consumers expect inflation to still be 3% or more over the next 5 years. Now, what does that tell you for higher for longer, guys? If we can't get inflation under 3% for the next 5 years, you think Powell could get proven wrong? That the next move the Fed makes might be a rate hike? Guys, I'm telling you, it's doubtful, at least to me, and right now, from what I'm seeing right now, that rates the Fed has set at about 5.35% overnight are restrictive enough to bring that inflation number all the way back down under 2% where they want it. It's crazy, guys. Consumers completely burn out, tired of inflation, tired of high prices, tired of a weak government that's doing absolutely zero, nothing to help them. When you couple this with what we saw on the retail, the retail number, the retail spending number, which completely cratered, now you can see why. Consumers tired. So it looks like now this is the beginning of what we've been expecting for a while with this inflation. Consumers pulling back from spending money. Not that they have very much to spend. When you look at the retail sales number was horrible. You got, consumers are not working, making money. You got Target and Walmart earnings cratering. These are like big stores for regular consumers, right? So you get an accurate picture right now of where consumers are at. They're tired, they're burnt out, they're broke, they're in debt, right? Consumers have finally had it. I'm telling you guys, expect a further weakening in retail sales. I don't see a giant bounce coming here like we've been getting from these. Whenever retail sales seems to go down, boom, it bounces right back up. I'm starting to think we might see a little less and less of this, right? Consumers pull back from any kind of real discretionary spending, not that they have much discretionary money to spend about. So what's going to happen? What do you think is going to get hit hardest? Leisure, vacations, eating out, especially at fancier restaurants, expensive show tickets, tickets to concerts going for so much money they're breaking up friggin' Live Nation right now. Not to mention anything, that's related to a big expenditure, consumer durables, big outlays for appliances. I'll bet we're going to see new car sales plummeting. We already know what's happening in real estate. It's just an ongoing disaster. So consumers have had it. Not a surprise to us. I've been talking about that for quite a while, guys. I don't know if it's really you guys are feeling this way, but I'm pretty comfortable in my life. And even my wife and I went out, had an Italian dinner the other night. Just a basic dinner, both having pasta. I had spaghetti with meatballs. She had a pasta plate with shrimp. We had soup and a drink with it. $62, guys. $62 for two. Now that's with tip, but that's just for 2 plates of pasta that we could have made here at the house for probably under $10. So people have freaking had it, and I kind of think like they do. With everything is so outrageous. You go to the store, you discuss it. You go to a restaurant, you look at the prices, you're blown away by them. Everywhere you go, everything you see. I had to buy tires for my car, 4 tires. Nothing outrageous, decent tires, $900 freaking dollars. I don't have a big 4-wheel drive with giant tires. I got a regular sedan. Guys, I don't know where the relief is going to come for consumers. You see prices falling. I would say that is extremely doubtful. Maybe we catch a break and prices don't go up so fast, but as far as prices falling, maybe for some specific items in grocery stores, seasonal items, stuff like that. But as far as real price drops, that's called deflation. The Federal Reserve is completely against deflation. They want to call it disinflation, which is just some kind of new made up bullshit word here. Guys, consumers are wiped out. I'm going to recalculate some things over this 3-day weekend and come up with a different kind of strategy for way we should be investing our money a little bit, because when consumers have had it, and we already know what that means. Consumers are 70% of this economy, guys. When they're tapped out, when they just decide that they're not going to spend their money, they're going to hang on to those precious dollars, man, that is just going to cause havoc in this economy. It's going to be fascinating to see how they decide they're going to deal with it. The Fed kind of stuck in between a rock and a hard place. You got, the Fed wanting to fight this inflation down. They're terrified of raising rates any higher than they have. So they're trying to hold the line at this 5.35% number. So they're afraid to raise rates. Rates are already high enough that the consumers are wiped out trying to borrow money. It's so expensive. Not only is everything expensive, borrowing money is expensive. And nobody knows that better than me in this friggin' mortgage business, guys. I'm telling you, it is, in real estate, a disaster of epic proportions. And what's happening with this now is builders, they know they really can't sell houses at this price. They're slowing down, building more houses. You can see building permits, new housing starts, all falling. Guys, this is all like the buildup to something even bigger, worse than we're dealing with right now. It's just bananas, crazy shit, guys, really. Okay, let's move on to a couple other little things we need to talk about today. I was reading today, AAA backed real estate bonds, backed by commercial real estate, now taking huge losses. More of them going in default and more of them being priced down, taking big haircuts. The bondholders, where they want to sell these bonds, are taking big losses. These are AAA rated bonds, guys. Now, we saw this before in 2008. How all these shit bonds were rated AAA. Pretty much, if they could write a bond up, it didn't matter the credit quality of the borrower. Everything got rated AAA, and that was very lucrative for those ratings agencies. This one is a little bit different. I don't really believe that, they're being paid the way they were back then to rate those bonds so highly. These are just commercial real estate bonds that were backed by super primo buildings that people believe were bulletproof, that are proving not to be bulletproof. You remember the story that I told you guys about that building in Fort Worth, Texas. Tallest building in Fort Worth, Texas, right? $137 million in 2019, just sold for $12 million. So you can see what's happening with commercial real estate prices. Regional banks are going to suffer. We've talked about that on the show. The dominoes are just starting to fall. I don't know what's propping this market up at this point. I think a lot of the money is coming because so much money in commercial real estate comes from hedge funds, private equity groups, stuff like that. I think they have the wherewithal to hold these and not sell at distressed prices that right there is kind of propping up the market. But as we start to see these foreclosures and bankruptcies coming with commercial real estate, we know they've still got $800 billion to refi in commercial real estate just this year, guys. So we know a big percentage of that is going to go bad. We know they're not going to get refied. Landlords are just handing over their keys. So this commercial real estate thing continues to pick up steam. I was reading an interesting article about the yield curve inversion. The yield curve has been inverted, meaning short-term rates higher than long-term rates. So it's kind of upside down, right? It's been like that for about 2 years. Now, I was reading about the history of this inversions and how they play out. And truthfully, guys, 95% of the time or higher, these inversions do point to a recession, which ultimately gets here. There's been a few times in the past where the inversion was long, like it is now, before the recession actually came. And it was interesting to see that a couple of these were some pretty significant recessions. 72, 73. 1980 with Paul Volcker, 2007 to all of these recessions seem to be long recessions, right? Sometimes you get a recession, it's over in 6, 8 months, 10 months, things are starting to get better. Sometimes you get deeper recessions, like say 2008, where it took 4 years to recover from that recession. So this one pointing to the recession still coming, and when it comes, it's going to be deeper and longer than a typical recession. At least that's what this inverted yield curve is telling us right now. So we'll see. Also, Goldman comes out today. They were the last of the interest rate cut bulls. They were the ones that were insisting we were going to get an interest rate cut in June. They moved it back to July. Well, now they've moved it back again. Now they say the first cut's going to come in September. I've already talked to you guys 100 times about why that's probably not going to happen. Won't be long, and you'll see Goldman moving their prediction to where we've had ours all along, maybe one cut in December. A couple quickies before we go. Interesting stuff not related to finance. Morgan Spurlock, a documentarian best known for his documentary Super Size Me. Remember that, guys? A great documentary exposing the fast food world, especially McDonald's. That documentary was quite unfriendly to McDonald's. He passed away at a very young age, just 53 years old. This was a guy who, in a very short span there, became a big documentarian. And his documentary about McDonald's, Super Size Me, where basically he lived on McDonald's for 3 meals a day for a month. And if they asked him if he wanted it supersized, he had to say yes. So he was eating all these supersized McDonald's meals, even trying, after a while, his health started to fail. He was even trying to eat like what they would consider healthy at McDonald's, salads and stuff like that. And even that proved to be poisonous for him. Hopefully that the documentary didn't lead to the cancer that ultimately took his life. But Morgan Spurlock, gone at 53. And lastly, this weekend, guys, if any of you guys, I know we got people from all over the world watching the show, but you guys in the Midwest, Kansas City, Iowa, Chicago, Illinois, all down Kansas, through the Midwest, all the way down into Texas, get ready, guys. We're going to have some very, very, very nasty weather this week. There's tornado warnings, severe thunderstorm warnings. You guys are in the Midwest, hunker down, be safe out there, guys. Anyway, that's it for this Friday prior to Memorial Day weekend. Everybody get out there, have a great weekend, barbecue, spend some time with your family, pat your dog, just get out and relax and enjoy life. Next week's going to be a short week, but I'm sure they're going to cram a lot into that short week, guys. We'll be here to bring you the news you need. Everybody have a super awesome weekend. Oh, by the way, before you go, please hit that like button for me, guys. Hit that like button. It changes things around on the algorithms. It gets our video in front of a few more people. I will be hitting everybody up in comments today. I've been kind of slacking on that the last few days. I will be on today. So if you've got a good joke, Kevin, you got something funny to say, you got a question that's not really too serious, will require a paragraphs or a detailed answer, hit me up. I'll be looking forward to talking to you guys. I'm going to go have a great weekend myself. I finally get a haircut this weekend. Yeah. Anyway, see you guys on Tuesday. Until then, guys, take care. Thanks.